At New Marion Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you. Today, March 22, 2023, the clock is ticking for Marion Deliveries. Lack of focus may come back to bite the EV manufacturer. Mullen Automotive stock continues to decline. Mullen is on the clock for delivering on a $200 million order for an enterprise-level client. A lack of focus and discipline is impeding the potential of Mullen stock. Once a hot commodity in 2022, Mullen Automotive, Nasdaq MULN, has since struggled to keep its head above water. In regard to the latest drama, the countdown is now on for Mullen to meet its original delivery target for a purchase order from an enterprise-level client. At the same time, management's lack of focus in general may hinder Mullen stock. Specifically, on December 14, 2022, Mullen disclosed a purchase order for 6,000 Class 1 electric vehicle cargo vans from Marion Isuzu, LLC, a member of the Marion Automotive Group. Per the press release, the firm order agreement is worth approximately $200 million. At the time, the announcement led to considerable buzz for Mullen stock. Randy Marion, CEO and founder of RMA, had the following to say about the order. "We see a tremendous opportunity with the Mullen commercial portfolio, and the launch of the commercial van could not come at a better time. There's significant pent-up customer demand for Mullen to fulfill. I have many customers looking at me to find product for their companies." On the other end, Mullen Chief Commercial Officer John Schwegman said the deal symbolized a real vote of confidence for the company. Unfortunately, though, that confidence may take a devastating blow if Mullen doesn't pull through. Headlining the press release is a message that deliveries for the order are to commence in the first quarter of 2023. Obviously, the end of first quarter is approaching in a matter of days, with Mullen providing little to no update. The company unhelpfully reiterated the basic terms of the deal in its latest statement. An undisciplined approach may backfire on Mullen stock. Fundamentally, what may be negatively affecting the sustained momentum of Mullen stock is a lack of focus and discipline. For instance, early last June, CEO David Michery said in an interview that Mullen would reveal everything about its delivery of an electric van to a Fortune 500 company at the end of second quarter. However, June 30 came and went with no update as promised. It's quite possible, then, that if Mullen can't make good on a PR disclosure deadline, investors will view delivering 6,000 EVs as a much bigger challenge. Notably, Mullen stock is down about 10% in the afternoon hours Wednesday. For the trailing week, it's down about 12%. Adding to the perplexity of Mullen stock is the company's deal with Chinese automaker Qianta Motors. Per Inside EVs, Mullen says it will re-engineer and redesign the Qianta K50, an electric-powered supercar, to meet homologation requirements for U.S. certification. The K50 is expected to reach 60 miles per hour from standstill in 1.95 seconds. The premium variant should also reach a top speed in excess of 200 miles per hour. Still, Mullen represents a deeply embattled enterprise that might not afford multiple ambitious initiatives. Per investment resource Finbox, Mullen stock scores an F grade for profit health, price momentum, cash flow health and growth health. Therefore, the company's most realistic avenue for funding is via equity dilution, something with which it already has a history. Why it matters? At the time of this writing, Mullen stock trades for around 13 cents per share. However, the Nasdaq requires a minimum $1 bid price for its listed securities. While Mullen did recently announce receiving a 180-day extension, this matter only applies more pressure on this already beleaguered company. Dear Mullen stock fans, mark your calendars for April 3rd. Mullen stockholders are eagerly waiting for the results of the Menzies pilot program. Mullen Automotive announced that it had entered into a 60-day pilot program with Menzies Aviation and Loop Global on February 2nd. 60 days after February 2nd falls on April 3rd. Mullen stock is down by more than 55% year-to-date. On February 2nd, Mullen Automotive, Nasdaq MULN, announced that it had initiated a 60-day pilot program with Menzies Aviation and Loop Global for its Class 1 electric vehicle cargo van called the Mullen 1. The pilot program will be held at Los Angeles International Airport. Menzies, which operates in over 250 airports across 58 countries, will pilot the program. Loop will provide charging infrastructure services. Menzies has a global fleet of over 8,000 vehicles that provide ground, air cargo and fuel services. Mullen believes that the one offers several use cases, such as transporting cabin cleaning crews to airplanes. We have committed to switching to electric vehicles wherever possible to reduce our carbon emissions. However, charging infrastructure can be a barrier, so it's great to be working with both Mullen and Loop to pilot a solution at LAX. Early feedback is positive, and I'm looking forward to seeing the results from this collaboration, said Menzies America's Executive Vice President John Redmond at the time of the announcement. Dear Mullen stock fans, mark your calendars for April 3rd. Now, 60 days after February 2nd falls on April 3rd, so Mullen stock investors expect to hear an update from the company soon. Mullen's van may be a good fit for Menzies, as it is anticipated to be the first Class 1 commercial electric vehicle in the U.S. market. The EV could also support Menzies' goal of becoming carbon neutral by 2033. The one will have a maximum payload of 1,683 pounds with a curb weight of 3,198 pounds. It will have a range of 110 miles per charge that will be powered by a 42 kilowatt-hour battery. Meanwhile, Mullen announced the return of its supercar yesterday, which will be rebranded under the Mullen GT and GTRS brands. The company received the intellectual property and distribution rights for the Kianta Motors Dragonfly K50 in North and South America for 5 years in exchange for $6 million and warrants to purchase up to 75 million shares of Mullen. Mullen will also pay Kianta $2 million for deliverable items and is obligated to purchase vehicle kits from the company. On top of that, Mullen will pay Kianta a $1,200 royalty fee for each homologated Dragonfly sold during the 5-year period. Thanks for watching. Marion Capital News. Please come back tomorrow for another stock news update. Thank you.